All right. ठीक है. Let's get to the chart now. So we will be covering all these 8 scenarios. We will be talking about 2 different strategies and then move on. Yeah. Let's take a daily one, right? What happened today? T3, rather 66, right? So 17,066 is something where we opened, and then the market started going down and down. We were thinking that it has kind of broken this critical support level, because 2 days back also we were in and around 17,850 rupees low. It is not a 50 rupees, it is the 50 points basically. 16,850 was the low. Now what happened today, it broke that and kind of trapped a lot of seller. What and how did it trap the seller is, everybody had their stop loss maybe 5.10 points here and there, but this was not reflected in option chain. So again, option chain has a different story altogether, so we are not getting there. But the idea is, it moved down and then it went up. It has created something called a hammer. I'll not say a perfect hammer, but somewhat close to that. And the good part is, it has shown a hammer in a downtrend. In last 7-8 days, if you would see on a daily chart, it has given some sort of a recovery sign. Again, there are some other pattern also being formed here, but we will not get into the pattern today, but just to explain you the overall sentiment, and then talking about what is that we are predicting tomorrow and all that. So we'll get there, right? Every day the market is going down, and then we see sign of recovery. Every day, if you will see this particular wick, right, this is bigger, right? So 16,985 to 850. So somewhere around 100-120 point ka wick. Same thing happened here and same thing happened today. Last 3 days, every day it is trying to defend. It is trying to defend the critical support level of 16,850, and it has been successful so far. Now, so we have seen the day chart, right? We have seen whatever is the daily sentiment. Let's start going backward towards an hour. What is the sentiment that happened in last hour or so? So this is the hourly chart, right? If you will see here, last 2-3 hours the sentiment was pretty good, right? It had a dozy, a long leg dozy, something like that. There was a candle formed, and then we have. So the first rule of thumb is, if there is a huge gap, and when I say huge, means in the session I talk about 4 different kind of gap, right? The common gap, the exhaustion gap, the breakaway gap, and the runaway gap. So what we are seeing currently is a common gap. When there is a 150 point gap up, and then there are sorters who are available at a higher strike rates, and they again take higher position out there. There was a lot of call writing, and the market moves down. So there is one separate analysis that people usually do, part of the option chain. I'm not sure if we have the time to go for an option chain today. I think we will have. So we'll go to the option chain also for quickly 5 minutes or so. We'll be getting there. Usually it doesn't sustain unless there is something massively good or something massively wrong in the market, right? So that is the first thing that you should always keep it in your mind when you trade. When you trade this. Next is never do a panic selling. When I say panic selling, means if you bought a call and next day there is a 50-60 point gap down or a 100 point gap down, that immediately at 9:15 you sell that, because that is the time wherein most of the people actually do the panic selling. There are a lot of profit booking happening in and around that time, and that is the time wherein you will have the least premium. So never exit unless there is a kind of a runaway or a mayday kind of a scenario wherein that for sure next day market will open and immediately within 5 minutes it will go like 300 point down. If that kind of a news is there, yes, maybe that is a different ball game altogether. It doesn't happen always, but if that happens, maybe exit that, right? Otherwise, at least wait for 5 minutes. Some people take it 3 minutes, some people take it 5 minutes, some people take it 15 minutes. What we prefer here in liquid is a 5-minute candle, because 3 minutes is a little bit too volatile to understand what is the sentiment that's gonna be. And then when we talk about 5 minutes, it gives us a good sense, right? So what can happen is, now that you have bought a call, so first scenario we are talking about, you bought a call, and then next day there is a gap up. So should you do a profit booking right at 9:15, or should you wait, or should you move on, right? So for that, the strategy is the first 5-minute candle is the strategy, is something, and you would find it at multiple different places. A lot of people trade it and a lot of algo trade it, but you need to understand how do you move? Because just knowing the 5-minute candle on a YouTube, you may not be able to figure out. So you need to understand it in detail. So maybe make a note of it, right? Now there is a 100-point gap up. So there are two things that you could have done. Either you could have booked everything, all your position, and then be happy with it. Hey, I got 100 points. I'm pretty happy. The another part is depending upon your risk appetite, depending upon your position sizing. The best strategy for an intraday BTST trader is at this point in time, whenever you see a gap, book maybe 20% of your total position. So assume that you had 10 calls that you have taken home. Maybe 2 or 3 you can book it when you see a gap up of 100 points or so.